Welcome to Shiny Side Out News. I'm your host, Dave Dunger. Breaking news this week is from the share market. All world markets except for Hong Kong and China closed lower this week, but don't tune out just yet. After hearing that Microsoft had announced it would buy back its shares, I followed the story and found that another 48 companies had also joined them and announced they would buy back their shares too. I will name them in a minute. Listen to the big names. In there, there's oil companies, computer, military investments, internet, film, property, and consumer product companies, even banks, are all buying back their shares. They all announced that it will give more value to their respective companies, but on the flip side, my take on this, it minimises risk to them if the stock market should crash. Have you ever heard your company's reasons for sacking a bunch of workers, stating it will increase productivity? Yeah, in those left will have to work harder. Downsizing, it's called. But the action from these companies this month, in the last 2 weeks, looks to me to be minimising their exposure to a soon-to-be stock market crash. To buy back your shares actually requires a permit. They all got them. If the big players are getting out unnoticed, I would suggest you seek professional advice. The last time the buybacks of this nature were announced was right around the 2008 global financial crisis, or GFC, which we still haven't recovered from. Our governments tell us we are, but we aren't. If the players who play the money game for us on our behalf can't play the game so we all win, and they're the best at it, then who is playing it? Does China want to move in when we can't afford to fight? Then they walk over our bodies and take over our countries? Yeah, it's a bit dramatic, but hey, got to make a message here. It's very important. I think it's time for a new game. The current game is only designed for greed, with greed in mind. We only had fun when there was greed, back in 1982. The game is stale. In a losing pattern, it's dead, Jim. It really is dead. Now listen to these companies before I sign off. Dell, Intel, Microsoft, Apple, Shell, BP, Exxon, Mobil, Verizon, Philips, Asus, Sage, Disney, Adco, BHP, Herbalife, this is a surprising one in there, Halliburton, Walmart, Atos, Thunderbird Resorts, Dollar Tree, Royal Unibrew, VMware, Vodafone, Bank of California, which is actually a conglomerate that owns a bunch of banks, CIL, which is coal mining, British Gas, DSU, Ahold, Hills Holdings. These are all property developing companies that hold a lot of property, clearly. Electronic City, Pandora, Polycom, maker of phones, believe it or not, Qualicom, Westfields, one of Australia's largest shopping centre building construction firms, SimCorp, Mitsubishi Motors, Activision, Dominion Diamonds, a diamond company, what? Marathon Oil, Mead Johnson, Schaefer Corp, Forbo Holdings, Hasbro, another game manufacturer there, New Skin, Illinois Tool Works, Viacom, film company, and Yahoo. They are all buying back their shares to minimize risk, to get out of the share market, and to avoid the crash. This is Dave from Shiny Side Out, signing off.